Now we're turning our attentions on the show to oil prices, which surged to their highest levels in years amid rising tensions in the Middle East, briefly topping $126 a barrel before pulling back again in volatile trading. There are growing concerns that any escalation involving the US and Iran could disrupt global supply and impact economies worldwide, including here in Ireland. So to help us make sense of it all, we're joined now by the Ennis-based economist and assistant professor of social policy at UCD, Micheál Collins. Micheál, thank you for joining us.
Alan, good morning.
That surge past $126 a barrel before easing back. It has eased back, but I guess depending on what happens in the Middle East, how likely are we to see it head up to that territory again and maybe even surpass it?
Yeah, we're living in a kind of constant world of perhaps Trump-induced uncertainty, Alan, and that continues. So, and I suppose that reflects what's happening with those prices. They just reflect all of us really not knowing where we are or where we're going or how things are likely to play out over the next couple of months. I think we can probably expect that they'll continue to stay in and around that level, if not go up. So, the shortage is beginning to kick in now in terms of oil and gas on the other side as well. It's not everything. We should remember it's about 20% of the world's supply that moves through, or at least can't move through, the Strait of Hormuz and comes out of that area. So that slowly but surely is beginning to impact. That's reflected in those prices. And of course, that has those knock-on implications for you, me, and everybody else in terms of our standards of living.
And in terms of developments in the Middle East, how soon after something happens or something is said, does the market react in terms of oil prices? Is it fairly instantaneous?
Yeah, it's a really interesting one, Alan, and I think somebody who's an expert in this area, which I'm not, I'm a good observer of it, does at some point need to roll up their sleeves and figure out what's happening here. The prices that you quoted for oil and those oil prices jumping around, they're in what are called futures markets. So in fact, they're the price for oil that will be delivered in 3 months' time. So when you hear these prices, it's oil more or less still in the ground that's about to come out and that will be available. So generally, there's kind of a 3-month lag between those headline prices we see in the news and the reality on the ground in terms of petrol pumps.
Okay, so the markets, Micheál, are basically, they're reacting to the fear of what might happen as opposed to actual supply disruptions.
Absolutely. Now, therefore, in a sense, the price of petrol or diesel or whatever else shouldn't jump up overnight, but it does. And that's kind of an intriguing aspect of all of this. There's something going on in the middle between the oil coming out of the ground, or at least the promise coming out of the ground, and you and I buying it, or related products that pushes the price up. But what it means, I suppose, Alan, is that we can probably realistically think that that doesn't look like an obvious solution is going to emerge over the next couple of weeks for this. It's gone on, we're 2 months now. We'd be lucky for this to be finished over 3 or 4 months. And that does mean that the sort of knock-on implications of that will take us right across the winter to the end of the year.
And of course, we're all, and people listening this morning, concerned as to what this is going to mean in terms of them heating their homes and filling their cars. What knock-on effects could all of this have on the wider Irish economy?
Yeah, I think it's interesting to see our politicians beginning to kind of point towards this, and they're not alone in terms of the narratives and politicians in other countries as well. So I think the Taoiseach over the last week talked about a difficult winter, which was a sort of well-chosen set of words, and I think that's probably the space that we're heading towards. And I suppose he didn't clarify on that, but I think we can take it that what he's thinking about and what he's been briefed on in the background is that we will continue to see high and increasing prices for fuel, which will capture petrol, which will capture diesel, which will capture home heating oil, which will capture gas. So all of those prices will go up, not quite at the scale of the increase that happened when the Ukraine war broke out. So it won't be as severe as that, but nonetheless, those prices will go up. And then, of course, they will have knock-on implications to transport costs, to food costs, which we know are being impacted by the provision or difficulties around the provision of fertilizer as well. So all of those things are going to come across, I suppose, meaning that you, I, and everybody else, Alan, are going to be exposed to higher prices for the kind of basics of life over the latter part of this year.
I suppose, Micheál, we're talking about how the markets in terms of oil prices reacts to events in the Middle East, and it did ease back after surging past $126 a barrel. But for anyone hoping that things might settle down for a little bit, they would have looked at their phone or opened their newspaper and seen Iran's new supreme leader, Mojtaba Khamenei, issuing a new threat to the US, saying foreigners who commit evil have no place but in the depths of water. He'll secure the Gulf region and eliminate the US abuses of the waterway. And Donald Trump is considering new strikes. So none of that really bodes well for oil prices staying relatively low compared to where they have been.
No, absolutely not. And so I think we are looking at this going to play out for a very long time. There was an interesting contribution from the head of the United Nations yesterday who is concerned about the impact this will have beyond kind of, rich countries like we are to poorer countries in the world who just simply won't have the resources to buy their way out of this problem and will be very exposed to the shortages in fertilizer, shortages in food and shortages in oil and the higher prices that emerge. So, yeah, I think we're beginning to see a very tricky situation emerged. This would have been okay, Alan, if it had only lasted for 2 or 3 weeks. I mean, we can talk about the politics of it, we can talk about all the other issues, but in terms of our standards of living, it would have kind of washed through pretty quickly. But now, yes, it does seem to be a situation where both sides are dug in. That doesn't seem to be a very obvious outcome. Possibly the Americans could walk away, but even if they were to walk away, that's still going to change the dynamics of that Gulf region. And then that has knock-on implications for us. I suppose, Alan, what it really means is that countries like ourselves, in particular, who are very exposed to this, the CSO pointed out earlier in the week that we import 80% of our energy needs now. It goes up and down across different points of the year and so on. But it does kind of point to us really needing to get a bit more serious about renewables and really needing to get a bit more serious about being a bit more sustainable on ourselves so that we don't end up back in a similar space like this in another couple of years' time.
Really is a topsy-turvy, ever-changing world we're living in, Micheál. I don't know, to finish, if there's any practical advice that you could offer to households and businesses trying to plan amid this maelstrom of uncertainty.
Yeah, I think the government will have to step in, and they do seem to have plans to do that. And, we'll see some flights cancelled later in the year because of shortages in aviation fuel as well. And all of that seems to be unavoidable at this stage. I think the government will be helping. They'll probably have some targeted measures. They've done some already, and you would expect that to continue right across the year, focused on topping up particular welfare payments, focused on assisting with the price of certain fuels. Because of Ukraine, because of COVID and so on, we kind of have expectations that the government will give everybody free money, which it has done, and that's been the Irish solution for the last couple of years for this. That hasn't been how other countries have been operating, but of course other countries haven't got free money flowing in the door from multinational companies paying windfall taxes. We do. It's an interesting choice. For the government, I think there'll be an expectation of support, but actually it's so out of our control, Alan, we're just going to have to try and navigate it. And therefore that brings you back around to the well-chosen words of the Taoiseach, I think, that it will be a difficult winter.
Okay, let's strap ourselves in. Thank you very much, Micheál. No doubt we'll be talking to you before the winter. We'll see where things are at then. But thanks very much for being with us on the show. That's Micheál Collins there, the Ennis-based economist and assistant professor of social policy at UCD.